10 Ways Billionaires Avoid Taxes. Following a year of reporting on the tax schemes used by the ultra-wealthy, ProPublica highlights the most effective ways billionaires may avoid paying taxes. Let us know your view about how billionaires avoid taxes. Your comment. Please like and subscribe to help the channel out. Our first article described how wealthy individuals with enormous fortunes, such Warren Buffett, Jeff Bezos, and Elon Musk, were able to do so while paying very little tax in comparison to their enormous wealth. They achieve this in part by keeping their huge stock holdings intact. In the US, income is taxed. They avoid income according to how the system defines it because selling stock generates revenue. Billionaires can borrow money against their assets to access their money in the interim. Additionally, loans are not taxed. Musk was the only one to reply. Buffett stated that he followed the law and preferred that his fortune go to charity. 2. The IRA with $5 million. We discovered that other millionaires avoided income in less traditional methods. A Roth IRA is a sort of account that protects income from taxes and is meant to help low and middle-class savers get ready for retirement. Tech tycoon Peter Thiel acquired a $5 million Roth IRA. Thiel deposited low-valued shares of the business that would become PayPal into the account back in 1999, a move that tax lawyers warned ran the risk of breaking IRS regulations. It is unclear if the government ever objected to the action. He made it possible for himself to gain untaxed billions. Thiel did not answer inquiries for the article's original queries. 3. The $1 billion parlor trick, converting trading at high tax rates into income at low tax rates.
Tech millionaires typically pay relatively low income tax rates, even when they do report income on their tax returns.
That is as a result of the source of their income. Long-term investment gains, including those from the sale of stocks, are taxed at a reduced rate. But what should you do if your main source of income, which is short-term trading, is above $1 billion each year? Do you merely concede that the increased rate will apply to all of your income? Jeff Bezos, the CEO of one of Wall Street's most lucrative companies, as we learned last week, did not accept this destiny humbly. Susquehanna International Group, his company, came up with innovative ways to change. 4. Make money while, legally, reporting losses. The magic of sports ownership.
A sports club purchase, such as former Microsoft CEO Steve Ballmer's acquisition of the Los Angeles Clippers, is one of the many ways provided by the tax code for business owners to reduce income through deductions. Whether the team is genuinely profitable and increasing in value is irrelevant. It's still possible to deduct it. We discovered that in some situations, owners may essentially deduct a player's contract twice.
They are permitted to incur deductions similar to those for factory equipment that depreciates over time. Even though teams nearly always increase in value, owners typically pay far lower tax rates than the athletes they hire because of this. 5. Build, drill, and save. Both the oil and real estate industries can serve as tax havens. Some sectors, like real estate or oil and gas, have so many tax incentives available that billionaires can completely wipe out their income even as they get richer. This is how Miami Dolphins owner and real estate developer Stephen Ross managed to avoid paying any income taxes for 10 years. Ross claimed to uphold the law. Another corporate tycoon, this one in the oil industry, was able to use one of the largest oil disasters in history to tap into an almost limitless supply of write-offs. Representatives of the businessman did not reply to calls for comment. 6. Even the hobbies of a billionaire can pay off at tax time. Another entertaining choice is to deduct money from interests and side ventures that the extremely wealthy can set up as enterprises. For some billionaires, racehorses are the thing. We discovered that 6 owners of thoroughbreds competing in the 2021 Kentucky Derby have deducted a total of $600 million from their taxes for their involvement in horse racing. Luxury hotels are the focus for some, like Ty Warner, the creator of Beanie Babies. The wealthy individual spent lavishly on a few iconic Four Seasons properties and then went 12 years without paying any income tax. Asks for comment were not answered by Warner representatives. 7. Do you believe your taxes are too high? Modify the tax laws. It can be beneficial at times to campaign for new tax breaks. Trump's huge, Magnificent tax cut for pass-through firms was the reward for the millionaires who donated millions to Republican politicians. We discovered that just 82 ultra-wealthy households received the $1 billion in tax savings from the adjustment in a single year. Some business owners have increased their savings by cutting their own salary and classifying the money as pass-through revenue instead of their own. 8. Why hedge fund managers make less money than tech billionaires. The wealthiest Americans frequently manage low-income tax rates due to the abundance of choices for tax reduction. The top 400 earners in the nation, individuals with annual incomes averaging over $110 million, were the subjects of our analysis of incomes and taxes. Although the group as a whole paid very modest rates, some groups, tech billionaires, heirs, and private equity executives, stood out even among this elite group because they had access to the strategies described above. Rich politicians, including the governors of Colorado and West Virginia, also use these strategies. 9. Brother, would you mind a stim check? The billionaires who claimed having incomes so low that they were eligible for government help, however, stood out the most. As a result of their tax filings placing them below the income criteria, $150,000 for a married couple, at least 18 billionaires got stimulus payments in 2020. 10. Trust this, how rich families avoid taxes by passing billions to heirs. We discovered that the estate tax had even more astounding flaws. The most popular method for ensuring that Uncle Sam doesn't receive a share of a fortune being left to heirs is through a trust. We found evidence that at least half of the country's 100 richest people had utilized estate tax dodging trusts, though no one can determine how frequent they are. Another story showed how 3-century-old dynasties used trusts to evade taxes as they passed down through the generations, enabling a fortune to pass all the way from the original early 20th century tycoon to, for instance, the great-great-granddaughter who recently received $210 million before her. Please subscribe for more videos like this and smash the like button to help the channel grow. Thank you.